Welcome to Every LA Talks with Los Angeles real estate agent Matthias Baker Mazzucci.
All right, let's talk about the different types of triple net leases. This is basically a series of video that I'm doing. If you're a Los Angeles landlord and you are thinking about stopping handling toilets, trash, and tenants, and you want to upgrade your real estate game and move into actual real estate investing, today we are learning about the different types of triple nets. Tyler, they're not all created the same. Is that correct?
Absolutely. Yeah, you're gonna have a million different options, and as a first-time investor, it can be scary. I think the simplest way to break it down are the three nets, right?
Okay.
A full triple net, your NNN deal, means the tenant is responsible for taxes, insurance, maintenance. Now, some properties are double nets, some properties are single nets. The important thing when you're buying these is to read the lease. The lease is going to tell you exactly what you're responsible for. And if it's a double net property, and a good example of a double net property are Starbucks. Everyone knows Starbucks, right?
Yes.
Starbucks leases traditionally are double net, which means that you, as the landlord, are going to be responsible for the roof, the structure, the foundation of the building, the parking lot. So if Starbucks calls you one day and says, hey, we need to repave our parking lot, the area was hit by a snowstorm or whatever it may be, you're responsible for paying for that. A full triple net lease, that doesn't happen, right? The tenant is responsible for paying for all of that. The other kind of lease that you can get into, Matthias, is what's called a ground lease. And this confuses people. A ground lease simply means that you own the dirt under the property, the ground, right? That's how I like to explain it. So you own the ground. It is the most passive form of investing because you don't even own the building. So the tenant can't ask you for anything because you don't own it, right? Now, if that tenant, Starbucks or whoever it might be, ends up leaving the building at the end of your lease, you as the landlord then gain ownership of that building. You can depreciate the building rather than just owning the ground.
Because as we learned, whatever is attached to the land comes with the land. And in this case, it's the building itself. So McDonald's or Starbucks can take the building down and carry it with themselves. I mean, obviously it would be impractical to do so. So that makes perfect sense. So basically, you can have some involvement and you can have zero involvement in this type of investing. So this is different, and they're called triple net, and they go from an absolute triple net, which is the one NNN, and then as you said, we the ones that are a little bit where you have some responsibility. Let me ask you a question. We talked about no management, because if you have a single tenant, most chances are you don't have to worry. But correct me if I'm wrong, there are triple nets that are multi-tenant, correct?
Correct. Yes.
Okay. In those cases, are there a management company that specialize in like let's say if you have 5-6 tenants, one big anchor tenant and a couple of little ones around, then you probably will want to have a management company, correct?
Yeah, it depends the kind of investor you are. Some people are super hands-on and they want to deal with that management themselves. If you've got a 5-tenant retail center, call it in Dallas, Texas, and you live in LA, you're going to get a much better return on that multi-tenant investment because there's more risk, right? You have 5 different tenants that you're managing. There's going to be more lease turnover. It's kind of like owning an apartment building, really.
Right.
You're going to have smaller tenants. They're going to have shorter leases. They're going to come in, they're going to come out. And if you don't want to deal with any of that or any of the releasing or negotiating leases, yes, hire a management company. Obviously it costs money and it's going to eat into your return, but you're going to have more time on your hands to deal with either your day job or whatever it is that you spend your time doing. So
if I'm a Los Angeles landlord and I'm tired of, and I want to move to a more passive form of real estate investing, I guess a triple net with a single tenant is, or a ground lease, as you mentioned, as an option. Those are things that are truly passive. But I can still get the real estate, tax benefits of depreciation, right? As an owner, which is wonderful. And also I can exchange. So if I have an apartment building and I want to sell it, and let's say, I own it free and clear and I have $1 million in capital gain, I can do a 1031 exchange into a triple net. So I zero out my capital gain. So there's no taxes due for me because I am deferring them, and I can continue and then start the depreciation on the new project. Is that correct?
It's exactly right. And you know, I'm based in Los Angeles. I sell these triple net properties in all 50 states. And what I see on all of the properties that I'm selling, probably 75% of the buyers are coming from California. They're exchanging either out of a single family rental or a multifamily rental, and they're moving their money out of state. That's typical, right? The typical buyer is someone who's sick of dealing with the tenants. They want something more passive. And they realize, hey, if I'm not going to have to manage this property, why don't I go buy something in Florida or Texas or Arizona? I don't need to live at the property.
Exactly. And it's not dealing with the tenants so much, because you know what? I love tenants. Tenants are wonderful people. Renters are amazing people. In all my experience, very, very rarely. The issue is the laws. The laws that are causing the problem for landlords, where they have their hands tied and they're unable to do capital improvements because you have no way of adjusting the rents and things like that. So it's kind of like it's an effect that, snowball effect, that gets worse and worse. So I'm totally, that makes perfect sense. We have so much more to touch on, but I want to wrap it up for this video. And we will talk, in the next video, we'll explore more about the triple nets. But for now, do not forget to like and subscribe if you're watching. And let me try that sign off again. If you're buying or selling in LA, we are just a call away. All right, we'll see you in the next video. Bye.
Thank you for watching. To find out more, visit everyla.com.